Hi, this is James Shugg with Westpac London's end of day report for Wednesday, February the 29th. A few big stories today, which at the end of the European session at least, has seen equity markets down, commodities down as well. I suppose the main news this morning was the European Central Bank's allotment of 530 billion euro to 800 banks in its second LTRO, or long-term refinancing operation. That compares to the 489 billion that was taken up by 523 banks in their first LTRO back in December. Add that all up, there's more than €1 trillion worth of very cheap funding been injected into the European banks by the ECB. It's basically 3-year loans funded by the expansion of the balance sheet of the ECB. So in sort of lay economics terms, you can call it is the ECB's version of quantitative easing. The market reaction to that was actually bit down, bit up. Wasn't really sure where to go. That wasn't the big driver today. What was the testimony by Fed Chairman Ben Bernanke when he delivered his semi-annual monetary policy report to Congress in the US. Now, we hear a lot from the Fed these days. They're much more transparent, they're much more communicative, but the fact that there was no real hint from Bernanke that he was seriously considering yet further quantitative easing, yet further stimulus, disappointed markets, and I'll run through some of the results or consequences of that in a sec. In other news today, we had American GDP growth revised up slightly in the fourth quarter from 2.8% to 3% annualised. No real standout component changes there, just modest upgrades to consumer spending, housing and business investment. The Chicago PMI factory survey, it rose quite sharply to 64. It's been running at or above 60 for quite a while now, but certainly bounced back to, I think, a 10-month high there, and its neighbouring Milwaukee survey was also a little bit stronger too. Still in the US, actually, later this evening we get the Fed's Beige Book, which is its regional summary of how it sees the economy going, prepared ahead of the next FOMC meeting in about 2 weeks' time. The European data included a slight down revision to inflation in January from 2.7 to 2.6%, and a slightly lower core rate too at 1.5%. And a few bits and pieces in the UK. Consumer confidence steady at quite a low level. So they are the main data events. But as I say, it was the ECB and then Bernanke that were the real developments of interest today. And as a result of that, just heading into the European close, we've got the FTSE in London down 0.7%, the French market down just 0.02%, so effectively unchanged, and the German market down around 1/3% today. And as I speak, the Dow in the US, it's off about 0.4%. It's at 12,955. In the commodity markets, which I neglected to talk about yesterday, I subsequently realised, mostly negative. Basically, with Bernanke hinting, or not hinting, that there's going to be any further stimulus, expectations that there could be further stimulus, of course, were dampened somewhat. And given that commodities did tend to be one of the real beneficiaries of previous bouts of QE, or at least speculation thereof, we've seen $3 decline there. We're looking at $1,715 an ounce. Oil prices are off more than 1% at $105.40 a barrel. Aussie dollar's not much changed though. It's at 1.076 against the US dollar as I speak. A few bits and pieces to watch for in Australia. We've got the quarterly business investment numbers for the fourth quarter coming up, and also the capital expenditure intention survey, which provides a bit of a guide to how businesses, or what businesses plan to be doing in the next couple of years in terms of their spending, and building approvals numbers for a bit of a guide on that part of the domestic economy. So those things to look forward to in Australia. and I'll be back same time tomorrow.